नमस्ते दोस्तों, आपका वैल्यू एजुकेटर चैनल में स्वागत है, जहां आप सीखते हो स्टॉक मार्केट में निवेश करके आप कैसे पैसे बना सकते हो। तो मेरा नाम है शशांक और यदि आप देखोगे तो करंटली जो मार्केट है, निफ्टी है, काफी इसमें करेक्शन चल रहा है। जियोपॉलिटिकल जो सिचुएशन है वो काफी अनसर्टन है, इन्फ्लेशन काफी बढ़ गया है। इसके अलावा जो यूरोप की सिचुएशन है वो काफी खराब हो गई है, बिकॉज जो नेचुरल गैस के प्राइजेस है वो काफी बढ़ गए हैं और जो वॉर है बिटवीन यूक्रेन एंड रशिया वो काफी लंबा चल रहा है। इसके वजह से जो ग्लोबल इकोनॉमी है उसमें काफी इफेक्ट आ गया है। तो ये अनसर्टन टाइम में ऐसे कौन से सेक्टर में या ऐसे कौन से स्टॉक में इन्वेस्ट करना चाहिए कि जो काफी एक डिफेंसिव स्टॉक है। इफ सपोज गोइंग फॉरवर्ड इंडियन इकोनॉमी में कुछ इशू आता है, स्लो डाउन आ जाता है, तो ऐसे स्टॉक्स में या ऐसे डिफेंसिव सेक्टर्स में उसका ज्यादा इंपैक्ट नहीं होता है। ये वीडियो हम ऐसे एक स्टॉक के बारे में डिस्कस करेंगे कि जिसके बिजनेस में एक्चुअली ज्यादा इंपैक्ट नहीं आएगा एंड गोइंग फॉरवर्ड आई एम एक्सपेक्टिंग कि उनका जो बिजनेस है क्वार्टर ऑन क्वार्टर जो है वो आगे जाके बढ़ सकती है। तो ये जो कंपनी है उसका नाम है HCG। तो HCG ये एक ऑन्कोलॉजी फोकस हॉस्पिटल्स का चेन है। तो ये वीडियो हम HCG के बारे में काफी डिटेल में डिस्कस करेंगे और यदि आपने चैनल को अब तक सब्सक्राइब नहीं किया होगा तो जरूर चैनल को सब्सक्राइब कर लीजिए। ये वीडियो जरूर आप कंप्लीट देखिए और यदि आपको ये वीडियो जो है वो पसंद आ रहा होगा तो जरूर इसे लाइक भी कर लीजिए। सो नाउ लेट्स डिस्कस मोर अबाउट द बिजनेस मॉडल ऑफ HCG। Healthcare Global Enterprises Limited is engaged in setup and management of hospitals and medical diagnostic services, including scientific testing and consultancy services in pharmaceutical and medical sector. The companies focus mainly on oncology, which are HCG Cancer Care, which provides oncology treatments like chemotherapy to the patients who are suffering from the cancer. HCG is also into multi-speciality, which forms a very small segment of the business and provides services to ailments other than the cancer like cardiology, etc. Under Milan Centers, HCG also provides services related to infertility treatment in women. Now let's first discuss about oncology business segment and deep dive into the industry scenario. The chart shows the estimated incidence of the cancer cases across the countries in 2015. We can see that India is second only to China with cases of 2.2 million. India also ranks the lowest in terms of diagnosis of the early stage cancer, which is stage 1 and stage 2. India diagnoses only 43% of the breast cancer cases at the early stage and only 10% of the cervical cancers and 8% of the head and neck cancer. The incidence of the cancer cases in India are expected to reach approximately 20 lakhs by the year 2024. The incidences of men and women are expected to be evenly separated. India is expected to be one of the regions which are going to experience higher cancer therapy market growth. Southeast Asia and South America could witness the fastest growth in terms of development of cancer infrastructure. The Pradhan Mantri Swasth Suraksha Yojana, which is PMSSY, was collected rupees 3000 crores under Union Budget of Financial Year 21. Apart from that, around 65,000 crores and 2100 crores has been allocated to the Ministry of Health and Family Welfare and Department of Health Research respectively. The government expenditure on the health sector has grown to 1.6% of the GDP in 2021 financial year from 1.3 in financial year 2016. The government has a target to increase its public health spending to 2.5% of the GDP by 2025 financial year. In the table, we can see the data pertaining to LINAC. LINAC is a machine that uses high energy radiation that may be used to treat cancer. We can see that India has lowest number of linear accelerator as of 2015 and has only 0.3 LINAC per million population. India has highest cancer prevalence and cancer incidences per LINAC at 7,310 and 3,216 respectively, which signifies the under-penetration of the market for the LINAC. The demand for the comprehensive cancer care centers have increased twice in 5-year period. The demand for the LINAC have increased approximately 6 times in 5-year period. The chemotherapy cycles have increased from about 2 millions to 2.3 to 3.5 millions in 2020. One of the key growth drivers of the oncology market are demographic changes. As the person crosses age of 50, chances of the cancer also increases. Aging population above the 50 are expected to reach 262 million in near future, and as a result cases are expected to increase 100k to 350k per year. The next factor driving the oncology growth in Indian market is the narrowing of the diagnosis gap. Growing awareness and greater public emphasis on screening is expected to result in increased reported cancer rates. The third factor is the exposure to risk factors like degrading air quality, consumption of alcohol, etc. These factors are expected to increase the cases to 350 to 400k annually. The final factor is the subpar level of the infrastructure. India has only 110 PET CT scan per million of incidence cases. We can compare the cost of cancer therapy in India versus US. India clearly has cost advantage with the quality of the treatment potentially at the par. The chemotherapy is approximately 67% discount to the treatment in United States adjusted for the PPP. The oncology services in India can be found at discount of approximately 86% compared to US markets. Radiation therapy in India are found to sell at discount of approximately 80% compared to United States. The Indian oncology market grew at the CAGR of 13% annually. The market reached the size of $165 billion in 2019 from $115 billion in 2016. Cancer has been the leading causes of deaths in India. Oncology has increased from 8% to 12% of the causes of deaths in India. Oncology is expected to grow faster than the overall healthcare market. HCG Oncology business operates on the hub and spoke model, wherein the HCG Center of Excellence in Bangalore is classified as hub and the other cancer centers classified as spoke. The company aims to attract expert clinicals who became a long-term partner for the HCG's comprehensive cancer centers. They hold meetings of the group of the cancer surgeons from various disciplines, thereby encouraging active participation in tumor boards. HCG has the largest team of expert oncologists and domain focused on subspecialists. The team intends to develop expertise in desired domain or organ. HCG uses latest technology as per global quality standards and outcomes. The company offers various courses to expand the footprint of the HCG's brand and increase the quality of human capital. HCG has the largest oncology brand and network with hybrid presence. The company partners with various local oncologists who seems to be brand themselves in their particular region. The partnership can be in form of joint venture, tie-up, or revenue share model. This makes HCG's model differentiated from others. HCG provides diagnostic services and treatment services like medical oncology, radiation oncology, and surgical oncology. Now let's discuss about these services in detail. The first type of services are the diagnostic services, which are pathology, which includes the molecular pathology test. Molecular pathology is focused on the study and diagnosis of diseases through the examination of molecules within the organs, tissues, or bodily fluids. The second diagnostic service they provide is radiology, which include nuclear medicine test. Imaging plays a vital role in accurately diagnosing and staging cancer as it provides detailed insight into the exact location and extent of the disease. Next service they provide is medical oncology. Medical oncology is a critical component of cancer treatment and primarily entails treatment of cancer with drugs. The medical oncologists treat the patients affected by a wide range of cancers such as malignancies of the lung, colon, rectum, breast and prostate, as well as malignancies of the blood such as leukemia and lymphoma. The third service they provide is radiation therapy. Radiation therapy uses high energy radiation to kill cancer cells. The services under radiation therapy include external beam radiotherapy, which directs the radiation at the tumor from the outside body. External beam radiation therapy is delivered by linear accelerators, which deliver a high-end dose of a radiation to the area in the patient's body where the tumor is located, and internal beam radiation therapy, also known as brachytherapy, involves placing radioactive material either into the cancer itself or into the tissue surrounding it. The final service they provide is the surgical oncology. Surgical oncology primarily entails the surgical removal of the solid tumors. The diagnostic service involves usage of three technologies that are digital PET scans, digital pathology, and molecular genomics lab. The radiotherapy has three technologies which are CyberKnife, Versa HD, and tomotherapy. Medical and surgical oncology is aided by technologies like Da Vinci robot and Versa HD robot. Surgical oncology also includes the technology for the transplantation of the bone marrow. As of Q1 23, HCG have total 22 comprehensive centers across India, out of which there is a one center of excellence which is in Bangalore at Kalinga Road. As of 2022 financial year, HCG also had two freestanding diagnostic centers, of which one is located in Chennai and another is at Vijayawada. Freestanding diagnostic centers are equipped with PET CT scanners and provide radiology and diagnostic services. HCG have 4 multi-speciality hospitals whose focus is shifting towards the providing oncology services. HCG ranked number 1 in Karnataka and has 514 beds. The Borivali Center in Mumbai is ranked 6th and has 321 beds, followed by Gujarat with 403 beds. These are the top 3 centers for the HCG. HCG has approximately 1979 capacity for the beds, 1737 operating beds, 31 linear accelerators, 17 PET CT scanners, and 450 plus oncologists and 80 operating theatres. The table represents the dates when each center was established as of 2021 financial year. The first center in the HCG network was set up in 1989 pursuant to a partnership arrangement, and they have since set up 21 additional comprehensive cancer centers through the partnership arrangements. We can see in the table that Bangalore, which is a center of excellence, which is technologically most advanced center. Center of excellence has the bone marrow transplant facility. It also offers specialized procedures such as liver transplants and stem cell therapies. The center of excellence at Kalinga Road had the highest number of beds at 225, which are the second largest number of LINAC and highest number of operational theatres. It also has the highest number of PET CT scanners. The center at the Mumbai is also a very technologically advanced center and holds the capability to serve the international and domestic patients. HCG has entered into various types of partnership arrangements, mostly with other specialist physicians and other hospitals to expand their network. These arrangements include setting up joint venture companies or limited liability partnerships with the partners, wherein the partner have minority ownership interest and there can be revenue or profit sharing arrangements. These arrangements contribute in reducing the time taken to establish and ramp up HCG centers, as they are able to benefit from the established clinical practice and the patient base of the partners. HCG has exited 3 comprehensive cancer centers it had planned. The first one was at Kanpur in 2018 financial year due to unfavorable market dynamics. As HCG started working on this center, they began to realize that there were certain market dynamics which were not favorable in the long term. Most of the patients were classified in government CGHS scheme and there were very few cash paying patients, and hence they expected the break-even time to be longer for this center. The second center was at Kochi, which was shut down in 2021 financial year due to delay in completion, and another reason was the COVID-19 pandemic. The final project which they have taken the shutdown was at Gurugram, and this shutdown they have taken in financial year 2022. The reason for the shutdown was the delay in the completion of the project due to external factors along with COVID-19. HCG has very strong presence in Tier 2 and Tier 3 cities. Tier 2 and Tier 3 cities account almost 62% of the cancer beds at HCG. Management claims to have the competitive advantage in these cities because the essence of the business model is the hub and spoke model. Management gives the examples of the Tier 2 cities like Nagpur and Baroda in which they have succeeded. The reason for the poor performance in these cities in past were due to lack of quality treatment being available. Their presence would enable the residents of these cities to take the treatments in their respective cities. Now let's understand the structural changes due to COVID-19. COVID-19 has prevented people from Tier 2 and Tier 3 cities from migrating to Tier 1 cities for treatment. This has increased awareness of the quality of the treatment at Tier 2 and Tier 3 cities. As a result, people have stopped migrating to Tier 1 cities for the treatment. COVID-19 has also led to significant development in the field of AI and digital technology. This enables HCG to serve patients in Tier 2 and Tier 3 cities with the same level of quality as the patients in Tier 1 city. For instance, HCG implemented Disha-C, an advanced platform for transitioning to electronic medical record (EMR),
with the intent of enhancing HCG's clinical competence and operational efficiency. HCG is looking to expand the centers which are relatively new in terms of patient registrations and focus on expanding the margins at these centers. HCG will be preferring expansion or establishing new centers through brownfield expansions rather than greenfield expansions going ahead. HCG plans to focus on technological innovation in cancer care like cell therapy, personalized radiotherapy, and genomics. It plans to leverage its existing technologies like imaging and pathological devices. HCG plans to expand its assets under asset-light model. The company has shifted from the purchasing the equipment to pay-per-use model, which involves the paying for the usage of that particular technology. HCG also shifted its business model completely to leasing the hospitals and avoid the purchase of the building. Finally, HCG aims to expand its brand among the medical and patient community. It is planning to leverage its existing brand goodwill. HCG is working with Microsoft to leverage the use of mixed virtual reality, which is still at the very infant stage. With HoloLens 2, healthcare experts can now collaborate with surgeons no matter where they are and interact on immersive 3D platforms to offer the best possible treatment. HCG announced the launch of the country's first extended reality lab using the innovative Microsoft HoloLens 2 at the HCG's Bangalore Cancer Center. By the virtue of HoloLens 2, HCG specialist doctor of hub centers in metro cities will share the expertise with surgeons working in the tier 2 cities. CVC Capital is a marquee private equity investor with a proven track record in global healthcare investments with an asset under management of 89 billion euros. HCG has completed the preferential allotment transaction of $150 million with CVC in 2020 financial year. As of 2022 financial year, CVC hold approximately 53% stake in HCG and classified as promoters. The table represents the investments made by the CVC in other firms which are currently held in their portfolio. The chart represents the trend of the capital expenditure, the net debt, and the vendor finance. The reason for the decline in capex is because of management is trying to focus on the consolidation of their business. Management looks to focus on the new centers and grow its base through the innovation of the technology, which could be funded by the cash which was historically utilized for the capital expenditure. We can also see that the debt has significantly reduced. When the CVC Capital bought the equity stake of approximately 50% in HCG, the funds were primarily directed to pay the debt and paying back the money owed by the vendors. One should value the hospital industry not relative to the earnings or profits but generally based out of EBITDA. This is because earnings are usually negative for asset-heavy companies in hospital industry due to heavy bookings of the depreciation. The chart shows the number of revenue, net profit and cash flow from the operations over the period. The revenue has grown at the CAGR of 16% since 2016. The net profit is negative in previous year, yet the cash flow numbers are positive. This is due to the fact that the HCG incurs heavy depreciation expenses on their equipments and technology. Hence, one should use the cash flow item for the hospital industry as the non-cash expense, which is depreciation, is added back to the cash flow statement. Another key reason for the HCG has taken the huge amount of debt because of which initially it was running into the losses. Now let's understand the terminologies used into the hospital industry. The first matrix uses average revenue per occupied bed, which is the total revenue earned divided by the total number of occupied beds. Next is average length of stay, which measures the number of days a patient stays on the hospital bed on an average. The last one is average occupancy rate, which measures the percentage of total beds occupied by the patients. HCG has primarily always focused on being the technology leader in the oncology domain. This is evidenced by the consistent increase in ARPOB over 6-year period. The ARPOB has grown at the CAGR of 5.4% over these years. The number can be expected to grow after new centers like Kolkata and Jaipur achieve greater penetration in terms of patient registrations. The ARPOB is greater in Tier 1 cities compared to Tier 2 and Tier 3 cities due to better margins. The ALOS has been in decreasing trend, which has in line with the management goals. This was a result of increasing trend of outpatient services to medical and radiation treatment and advanced technology like CyberKnife in the surgical oncology domain. The first chart represents the revenue of the existing and new centers since Q2 2021 financial year. We can clearly see that increasing the trend of the revenues in both the existing and new centers over the period. The existing centers' revenue have grown at the approximately 6.7% over last 8 quarters. The new centers' revenue grown at about 9.9% over last 8 quarters. The second chart plots the EBITDA of the new and existing centers since Q2 2021. The EBITDA of the existing centers have grown at 9.8% over the last 8 quarters. Then we can see that the EBITDA has turned out to be positive compared to initially loss-making new centers. Here we can check the revenues of the HCG centers present across different states. Karnataka has grown at the CAGR of approximately 10%, while Gujarat grew at the CAGR of 12% and Maharashtra grew at the CAGR of 36% from 2018 to 2022. The growth in Maharashtra can be attributed to centers in Nagpur, Borivali and South Mumbai. The growth is seen due to the transition of new centers into mature centers, which is a result of better oncology in Tier 1 cities and greater penetration in Tier 2 and Tier 3 cities like Nagpur. We can also see that the average revenue per occupied bed has increased. This is a function of increase in patient registrations at the expense of centers. Karnataka has grown at a CAGR of approximately 5%. Gujarat has grown at a CAGR of approximately 5.5% and Maharashtra has grown at a CAGR of approximately 11%. Some of the increase in ARPOB has also contributed due to pent-up demand created after COVID-19. The average occupancy rate has risen considerably in financial year 2022. The rise can be attributed due to pent-up demand created by the COVID-19. The management expects that the AOR to sustain at 45 to 50% in future as a result of decreasing average length of the stay due to better technology. Tier 1 cities can be expected to have operating EBITDA about 20%, whereas Tier 2 and Tier 3 cities will have the relatively lower EBITDA margins. Karnataka has the highest operating EBITDA due to the fact that the center of excellence is present in Bangalore. Maharashtra has scaled up after 2020 primarily due to center at the Borivali and Nagpur, which were achieved the break-even. We can expect the Kolkata region to drive the EBITDA margins in each region once it will achieve the break-even. Management doesn't expect the huge increase in number of beds at the center due to multiple reasons. The first being that the management aims at consolidation of business and aims to expand margins of the new as well as existing centers. Second is that the management expects the days required for the patient to admitted in the hospital to go down and hence doesn't see the need to expand. The revenues and profitability of the business are highly correlated with the patient's registrations. We can see that the patients have grown steadily over the past years until 2020 and 2021 financial year. The patient registrations have increased to 73,420 in 2022 financial year. Management expects the patient registration to reach to 90,000 to 1 lakh in near future. The revenue from the international patients also took the hit during the 2020 and 2021, but it started recovering in financial year 2022. Management is looking to book revenues from international patients from the centers in Bangalore, Mumbai and Kolkata, as these are the Tier 1 cities with relatively much advanced technology. The management has very positive outlook on its international business. The revenue from the international patient have been very imperative source for the success of the business. HCG has the highest number of comprehensive cancer centers in India. HCG have currently 21 cancer centers in India, which is almost 2 times larger compared to the nearest competitor. Out of total revenues, the contribution from the oncology is about 82%. This gives HCG the serious competitive advantage compared to other players when it comes to very complex diseases like cancer. Despite the growing incidence of cancer, there is a shortage of cancer centers in many countries in Africa. This growing demand presented HCG with an opportunity to establish a network of specialty cancer centers in Africa. The company, through its subsidiary which is HCG Kenya, has acquired the majority stake in Cancer Center Kenya, which is CCK, a leading cancer center in Nairobi in 2018 financial year. CDC, the development financial institution of UK government, had partnered with the HCG for Africa investments through HCG Kenya, an offshore subsidiary for the acquisition. CCK started the operation in 2010. Revenue from the HCG Africa in 2022 financial year was 2.7 crores. Milan, a reproductive medicine specialist, pioneered IVF services in India and offers comprehensive solution for the fertility treatment. IVF stands for in vitro fertilization. It is a complex series of procedures used to help with the fertility or to prevent genetic problems and assist with the conception of the child. During IVF, mature eggs are collected from the ovaries and fertilized by the sperm in lab. HCG has entered into the fertility business through the acquisition of 50.1% in BACC Healthcare Private Limited. HCG acquired the remaining additional stake from the existing founder in the Milan to consolidate their position in 2021 financial year. Total fertility rate indicates the average number of children to be born per woman during her reproductive period. Women's age and education are extremely important factors that have impacted fertility levels in India. Fertility in the rural areas is greater than the urban areas in all the age groups, while it reaches the peak in 25 to 29 ages and declines thereafter. With increase in educational level, there seems to have the decline in fertility rates. It has seen that the graduates and above have the TVF of 1.7 and women with education up to 12th standard have a TVF of 1.8 to 2.9. Major causes of the infertility are listed in the chart. Women suffering from the PCOS may have the infrequent or prolonged menstruation periods. PCOS incidence in India reported in the range between the 4% to 23%, where the mean global range is between 5 to 10%. Endometrial tuberculosis causes endometrial and tubal damage resulting in infertility. Prevalence is estimated to be approximately 18% among infertile women in the reproductive age in India versus compared to 1% in USA. Obesity is another cause of concern. Obesity in men is increased from 17% in 2010 to 20% in 2014. Tobacco consumption in India is estimated to be 17% and it is approaching the levels of UK and USA. Alcohol consumption in India has increased from 3.6 liters in 2005 to 4.3 liters in 2010. Among all the countries, the need for the parenthood is most prevalent in India. The importance of the social status that comes from the parenthood is also most prevalent in India out of all the other countries. Despite these factors, the lack of awareness is highest in India. This presents the Milan with a significant opportunity. Here we can see the new registrations and IVF cycles have seen the uptrend since 2016 to 2020 and 2021, but in between there was a hit due to COVID. Milan currently possesses 23 IVF specialists and 11 embryologists as of 2022 financial year. We can clearly witness the consolidation efforts taken by the management. Management is going to focus on expansion of current business before it plans to expand into newer geographies. Milan has 7 centers in total. Bangalore have the 5 centers. Shivananda Center is the center of excellence and it is also the oldest center. Out of the 5 centers, 4 are the existing center and 1 is a new center located in the Whitefield. North India have 2 centers which are in Delhi and Chandigarh, and both of these centers are classified under new category. The table gives the details about each center regarding its location, year of establishment, availability of IVF services, endoscopy theatre, embryology laboratory and neonatal ICU. The Center of Excellence at Shivananda has highest number of beds and provides all the services and has all the facilities. Milan new center in Whitefield launched to strengthen the presence and market share in Bangalore region. Milan center in Ahmedabad was restructured for strategic reasons. Management has given the guidance for the long-term strategy. Company looks to add more medical talent and believes that the post-COVID the growth of the business can be significant. Management is very positive on the Milan center for next 2 to 3 years. The revenues from the HCG centers have grown steadily at the rate of 16% from 2016 to 2022. This had seen the hit in 2021 due to COVID-19, which affected the business due to halt of surgeries and patients traveling from the foreign lands. The revenue contribution from the HCG and Milan has stayed consistent at 95% and 5% respectively. Government regulation prices for critical medical treatment, including that of medical devices which private hospitals charge from the patients, remain a risk to the revenue and margins. Also, directions for the mandatory participation of the government schemes and free bed for the poor patient etc. could impact the revenue and the profit growth for the HCG. Center of Excellence at the Bangalore is HCG's one of the most profitable region. Any adverse economic, regulatory or other development in this region can impact overall profitability of the company. HCG is well poised to capture the growing potential in the oncology space with pan-India focus. Management said that the capex phase is over and focus would be now improving the efficiencies and the profitability. Company will be now focusing more on consolidation of its existing facilities, which would drive better operational performance. Moderation in capex, EBITDA margin expansion, and improvement in RPOP and ALOS are the triggers which may lead to re-rating of the stock.
तो यदि आपको भी ऐसे स्मॉल और माइक्रो कैप जो करंटली अनआइडेंटिफाइड है, जिसके वैल्यूएशंस करंटली अच्छे हैं और ये बिजनेस में फ्यूचर में अच्छा ग्रोथ है, तो यदि आपको ऐसे बिजनेसेस के बारे में ज्यादा जानकारी चाहिए, आपको एक पोर्टफोलियो क्रिएट करना है आउट ऑफ ऑल दिस बिजनेसेस, तो आप मेरे माइक्रो कैप क्लब को ज्वाइन कर सकते हो। इसकी जो लिंक है आपको नीचे डिस्क्रिप्शन में मिल जाएगी। तो यहाँ पे वी विल बी बिल्डिंग अ पोर्टफोलियो ऑफ 20 to 25 स्टॉक्स जो जनरली माइक्रो कैप या स्मॉल कैप कैटेगरी में आ जाते हैं और मार्केट में ज्यादा इसके रिलेटेड डिस्कशंस नहीं है, बट प्रोवाइडेड दैट जो बिजनेस है इट इज अ वेरी गुड बिजनेस और वो ईयर ऑन ईयर यहाँ पे ग्रो कर सकता है। तो ऐसे काफी पोटेंशियल अपॉर्चुनिटीज है जिसके बारे में मैं पर्सनली काफी डिग डाउन करता हूँ, जिनके बारे में मैंने काफी डिटेल में स्टडी किया है। और ये जो स्मॉल या माइक्रो कैप नेचर के स्टॉक्स होते हैं, जो डिस्क्लोज इन्फॉर्मेशन है वो ज्यादा नहीं रहता, इसीलिए स्कटलबट इज वेरी इंपॉर्टेंट। स्कटलबट यानी आप उनके प्लांट को विजिट करो, उनके मैनेजमेंट को मिलो, उनके अलग अलग जो एम्प्लॉयज है उनसे जानो कि ये जो बिजनेस है वो कितना अच्छा है, बिकॉज एनुअल रिपोर्ट्स में ज्यादा डाटा नहीं मिलता या कॉन्फ्रेंस कॉल्स या इन्वेस्टर प्रेजेंटेशन वो पब्लिश नहीं करते। इसीलिए स्कटलबट करना, ऑन ग्राउंड क्या चल रहा है ये समझना इज वेरी इंपॉर्टेंट। सो दिस सेम अप्रोच आई विल बी फॉलोइंग टू क्रिएट अ पोर्टफोलियो ऑफ 20 to 25 स्टॉक्स which are only focused into the micro and small cap category, जिसमें जो growth का potential है in future it can be a very good potential, and if we can identify these smaller stocks at their early growth stage, then wealth creation runaway can be very long. तो यदि आपको भी मेरे साथ जुड़ना है तो यू कैन चेक द लिंक इन डिस्क्रिप्शन अबाउट द माइक्रो कैप क्लब, और माइक्रो कैप क्लब रिलेटेड जो डिटेल्स है आप मेरे वेबसाइट पे भी देख सकते हो। मैंने एक 1 आवर का एक सेपरेट यूट्यूब वीडियो भी क्रिएट किया है टू एक्सप्लेन मोर अबाउट द क्लब। तो ये जो सारे डिटेल्स है आप मेरे वेबसाइट पे और यूट्यूब पे चेक कर सकते हो। तो यदि आपको ये डिटेल एससीजी का वीडियो पसंद आया होगा तो जरूर से लाइक कर दीजिए, मेरे चैनल को सब्सक्राइब कीजिए और बेल आइकन पे क्लिक कीजिए ताकि ऐसे जो वीडियोस है आपको आगे जाके भी मिलते रहे। और जरूर ये जो वीडियो है आप आपके सारे फ्रेंड्स के साथ शेयर कीजिए ताकि उनको भी काफी अंडरस्टैंडिंग एंड नॉलेज मिल जाएगा।